Hello traders, this is Antony. We are back again today. So welcome to the channel if you are new to the channel, and if you have been here for some time, still feel much welcome to this video today. And today I'm going to reveal my trading plan. I know this is not something that you receive from most of the traders, because some of this information you have to pay for you to be told. But for me, I've decided to reveal my trading plan or my checklist. What do I have to look for before I take any trade? Because as a trader, you must have a trading plan. As for every business that you are running, for you to run a business, you have to come up with a plan. The same thing uh, applies in trading. Yeah? In every strategy that you are using, you must have a plan. Yeah. How do you apply it, when do you apply it, and such like things. So before I kick off the video, so kindly, if you are new to the channel, I urge you to take a few seconds of your time and click on the subscription button. Make sure to like the video, and also don't forget to turn on the notification bell. So without a further ado, let's start our video. So as I've said, I'm going to reveal my trading plan, and I'm going to explain every checklist in my list here, each and every one, because from here I have like 7 of them, and I'm going to explain how I use them. And later on, I'll show you in the chat some of the setups, or that some of the examples that I can find on the chat. Uh, there are all of these checklists that you can see here. So let me begin. First of all, in every time that I open my chart or I open my trading view, the first thing I have to look for is the market structure. And when I'm talking about the market structure here, I'm talking about the trend or the bias. In other words, in simple terms, I'm talking about the direction of the market. Are we bullish or are we bearish? Because as you know, you have to make the trend your friend. Don't go against the trend of the market, not unless you know what you're doing. Even though you know what you're doing, sometimes it is very risky, and it has low chances of playing out other than following the trend of the market. So the first thing I have to look at the market structure. You have to know, are we trending bullish or are we trending bearish? So that is the first thing I will look for. So now that you know we are bullish or we are bearish. So if you are bullish, you know very well you should be looking for a bullish setups. If you are bearish, you should be looking for a bearish setups. Or in other words, you should be looking to sell when you are in a bearish, and to buy when you are in a bullish. So the second thing that I have to look for, do I see a sweep of liquidity? And if you have been in this channel for some time, you know very well what I'm talking about when I say a sweep of liquidity, because for me, there must be a sweep of liquidity. So all these checklists is very important. Every point that you see here is very crucial, or it's very important for my trading strategy. So I have to see a sweep of liquidity. And when I'm talking about sweep of liquidity, it's either if I'm bullish, so I mean the low. Remember, if when we are bullish, the market is making a series of higher highs and higher lows. So my higher low, if I'm in a bullish trend, must have swept liquidity. Are you getting? So that low must sweep the liquidity first before going up and break the structure to the upside. So that one must be there. Then the third one, and before I go to the third one, the same thing with the bearish one. When we are market is trending to the bearish, that means it's making a series of lower highs and lower lows. So I expect my lower high to have swept liquidity before pushing to the downside and break the structure or change character in whichever way. Then the third one, it's a valid, and remember here I'm emphasizing the word valid break of structure or change of character. If you don't know how to mark a valid break of structure and a change of character, don't worry, because I've already made a video on how to mark a valid break of structure and change of character. So somewhere in the description of this video, I will leave a link to that video, or you can find it in my channel. I have a video on how to mark a valid break of structure and change of character. So that video is very much important. So you can revisit the video and make sure you watch the video until you understand how to mark a valid break of structure and change of character. So I must see a valid break of structure or a change of character before I move to the next checklist. Next point in my checklist. I don't know whether you are getting. So first thing is the trend. The second one, I have to see. So when you look at the trend, that means now you conclude whether you are bullish or bearish. Now you go to the next one. You see, is your higher lows or your lower high, has it swept any liquidity? That is the next step. The third step is, do you have a valid break of structure or a change of character? Then the third one, after you mark your break of structure or your change of character, you go to the next step. The next step, which is also very, very, very important, which is the inducement or the liquidity or the SMT or the smart money trap. Where is the trap? Because by just marking a break of structure or change of character does not mean that you got everything. No. So you have to know where is the inducement, where is the liquidity, and where is the trap. All those one means the same thing. I have to see the inducement, I have to see the liquidity, I have to see the SMT. Now, after you mark or after you identify where is the inducement, where is the liquidity, or where is your trap, then you go to the next point, which is also very, very important, because this is the area where now you mark your point of interest. Or in other words, this is where we have a area of interest. Where are you looking forward to take your trade from? Are you getting? And this is where we are talking about the point of interest, or you can call it the area of interest. Now, it's not just any area of interest. And for me, I like to use the order blocks. And when I'm talking about the order blocks, you can call it a demand zone, you can call it a supply zone, you can call it whichever. We have the breaker blocks, we have the mitigation block, all those points, whichever one that you use. For me, I like to use the order blocks. So now I have a rule for my order block, because in the chart I can see order block anywhere. So for this order block of mine, it has to be unmitigated. Unmitigated means it has not yet been used. Are you getting? This order block has not yet been mitigated or used. And that order block also must have attached to a fair value gap. So I must also see a fair value gap attached to my order block. I don't know whether you have understood point number 5. That order block must be unmitigated and must have a fair value gap. So if you are watching these videos, sorry, you can have a pen and make sure you write these points down, because they are very important. Whenever you are looking to take in trade, make sure you see all of these one, and I can promise you this one will change your trading style. Then the point number 6, After now you have marked your area, your interest, you have marked your point of interest. Now you wait. You wait for the market to come to your point of interest. Are you getting? Of which this is the point whereby most of the traders they don't like, because now this is whereby the patient is required. You have to be you have to have the patient with the market. Just to stay away from the chart. If possible, just say set the alert and wait for the market to come to your point of interest. After the market comes to your point of interest, that's when you go to uh the next point in your checklist, which is the entry confirmation. And for me, I have also the rules for the entry confirmation, whereby the next video uh, or I'll make a video, I'll make time and make a video and show you my entry confirmation. How do I take my entries? What do I consider for me to take an entry, or do I just take entries randomly? So don't worry, I'll also make a video on how for my entry confirmation. I won't ask you for any penny. I will make that video free of charge. So stay tuned to the channel. Please make sure you subscribe to the channel, because I promise you this video is coming very, very, very soon. Because I know very well entry confirmation is very, very much important when it comes to trading. Knowing when to get in and where to get out, it's also very important, because that is what is going to determine whether you are going to stay in this game of trading or you are going to quit. Because you knowing not when to get in and when not to stay, when to stay away from the market, you have to know that. Because if you don't know that, then you know the outcome is losses and unnecessary losses. Still, when it comes to taking this entry confirmation, I also have to align it with the time, which most of the traders they don't like. They don't talk about the time, because time in trading is very important. And when I'm talking about time, I'm talking about the session. Because for me, I don't trade the whole day. I don't trade the whole night. I have specific times of the day that I trade. And the only specific time that I like to trade is either during the London session or during the New York session. I believe you know what I'm talking about. That is those sessions. We have the Asia, we have the London, and we also have the New York session, which is the afternoon session in my country. So still, my entry confirmation, if I can see the entry confirmation, maybe later at night, I won't take that trade, because that is against my plan. My plan says I should take my trade either during the London or the New York session. I don't know whether you are getting. You know, the hardest part in trading is following your trading plan. I don't know whether you have realized that. The hardest part in trading is following your trading plan. Because I believe when you master, or when you master the idea of following your trading plan, that is when your trading will become the easiest thing that you ever dreamt of. Because you know the idea, when a beginner comes to this field of trading, you come with the idea that the more trade you take, the more money you make. But that one does not apply in trading. In fact, the less you do, the better. So that means you have to be selective. You have to wait for um, high probability setups that checks out with your checklist and also your trading plan. So that means you don't take every setup that you see in the chart, because a setup can have all of these ones but still fail to to play out. I'm not saying that now that I've built my trading plan, whenever all these checklist appears or checks out, that trade should be a win. No, I didn't say that. But for me, this one I've used it and I've seen it playing out more more than uh, the times that it loses. So it has this trading plan is profitable if you apply it well. That is the point. Every trading strategy that you have heard of or you can think of, it's good. So long as you apply it well whenever you apply it. That is the point. Just practice the strategy that you are using until you familiarize it well. Don't jump from one strategy to another, because by doing so, you are you are harming yourself, you are stressing yourself. Just give any strategy time, practice it until it makes sense with you. Now, going to the last point in my checklist, which is also very important, it's a proper risk management. This is what you call the risk appetite. What are you risking per trade? And when we talk about proper risk management, this topic, it's topic on its own. It's very wide, because my risk management is not your risk management, because I might have a small account, you might have a bigger account. So you calculate or you apply your risk management according to the the account that you are having, the account size. So this is whereby you have to have a risk to reward. Which risk to reward are you using? Which I recommend 1:2, at least 1:2. And if you can get 1:2, that is good. If you can get at least 1:3, which I also use, it's also perfect. The next one is stop loss. Always make sure you put a stop loss in every trade that you take, because there is no guarantee that when you will execute this trade, it's going to be a win. No one knows whether this trade is going to be a win. We just have a hope and a belief on your strategy that this trade might, underlying the word might be a win. So that's why we use the stop loss. If you are very sure, of which I don't know whether there is anyone who is sure of every trade that you take. If you are sure, then don't use stop loss. If you are sure, which I don't expect to be sure that someone is saying that this trade, I'm very sure that this trade is going to be a win. No. So always make sure you use a stop loss and have a constant risk to reward. Don't just jump from one risk to reward to another. Maybe today you use 1:1, tomorrow you use 1:2, the other day you use 1:7. No, just stick to one. If it is 1:2, stick to 1:2. It's 1:3, stick to 1:3. And that marks the end of my checklist, guys. I'm telling you, if you practice this checklist, guys, it is going to be insane. You are going to make good amount of money from this trading. Now that you have seen my checklist, you have seen my trading plan. Now I'm going to take you into the chart and see what am I talking about. Is it really, does it really work from the real market? Now I'm going to give you some examples from different charts. Here I'm in gold chart. I'm going to go to 15 minutes time frame. Here there is this setup that I was waiting last time. I think on my previous video that I made on a top-down analysis, I explained this setup, but unfortunately market never tapped into my setup, so I ended up missing this beautiful trend. of which it played out. But that is not what I'm going to explain now. For now, I'm going to show you my checklist. Whether whatever I was talking about in my checklist, it's in this setup. So first of all is the trend. And what I can see here, the market was trending to the bullish. The market is bullish. I think you can see we are very much bullish. But this setup was a counter trend. This, you have to agree with me, this is a counter trend. But it has to align with my plan. Because even at the end of every bullish trend, there will be a bearish trend. Market does not just move into one direction. We have market has to have what you call a retracement. So I believe this one to be a retracement before now we continue with our bullish move. So this is what I saw. I know very well we are bullish, yes, but at some point market has to pull back. And this is what I had. This is the last break of structure. Then we had a retracement, then another break of structure. Is this break of structure valid one? If you have said it's a fake, then you are correct. If you don't know whether it's a fake or valid one, make sure you check on my video on how to mark a valid break of structure. Then market retraced back, swept this liquidity here. This now became our inducement. Market swept that inducement and then went ahead and broke the structure. After this break of structure, I was not expecting market to come and break this low. This was my strong low. So, but market came back and broke this low. So that means now I have a change of character. And this change of character is very much valid because we had an inducement, a break of structure which swept liquidity above here, then came to the downside and broke the structure to the downside. Then after that, I had marked this order block from the 30 minutes time frame. The next point in my checklist is a sweep of liquidity. We have the structure, it's bullish. Then we have the sweep of liquidity, that is number 2. Number 3 is a valid break of structure or change of character, which we have seen here. The next one is the SMT, the liquidity, or the inducement. Where is the inducement? After this break of structure, market tried to retrace, then pushed to the downside and broke this structure. You know, as a beginner, when a beginner sees this break of structure, we'll try to take a trade from here. But that is not what we do in this channel. Because we know very well, this break of structure, it's not a valid break of structure. This is an inducement. And which type of inducement is this? This is a major inducement since it has been formed after the change of character or a break of structure. So I knew very well this high here will act as an inducement. We also have another inducement here. This retracement has not swept any liquidity. So this also becomes an inducement. So this, after marking my inducement now, I went ahead and marked my order block. And I think this order block was marked from the 30 minutes time frame. Yeah, you see very well. This is my order block, or you can call it a supply zone. Now, what have we said about our supply zone or our order block? Must be attached to a fair value gap. And also this order block should not be mitigated. If you look at this order block has not been mitigated. So it's a new order block. Or in other words, I can call it, it's a virgin order block, has not been mitigated. Then you have below it, we have a fair value gap right here. So that is my order block. After doing all that, the next part becomes waiting. Wait for the market to come to a point of interest. But now I have to put another point here. If my structure is from 15 minutes and below, most of the time I don't wait for. If there is no reason for me to wait for confirmation, I don't just wait for the confirmation. What I do, I just place a limit order here, my stop loss, and wait. because for those lower time frame markets, most of the time don't give you the confirmation entry. They just move aggressively. More so if we're taking that trade during the session. If your trade happens during the session, most of the time you won't get that confirmation. So I only take for confirmation if maybe I'm having some doubts with my point of interest. Are you getting? So here I had just set my limit order here, then my stop loss here, and the take profit here. Then the next part is just a game of waiting and see what the market will do. And if you see look at the time here, you can see very well. This was around 1 p.m. during the London session. This one happened during the London session. Market sniffed my order block but never tapped me in, which is something that I'm used to. Not every time that market will come to a point of interest. Sometimes these happen. Sometimes even market goes to your point of interest, uh, and then taps your stop loss, then it moves to your direction. You just get used to these things, because that one is inevitable. You cannot control it, and it has to happen. So market never tapped me, and you can see very well this setup was. I was waiting for this setup during the sessions. If maybe this could have been maybe at the midnight or during the Asian session at midnight, I would not have taken this trade, or I would not have placed my limit order. In fact, after 6 p.m. in my time or in my country, that is when I deleted my limit order. I think when the market was somewhere here, 6:30 somewhere here, I just deleted my limit order because I knew very well the time I'm out of the time and I don't trade outside the session. So uh I just tend to make peace with that this setup is not going to play for me. Then I wait for the next setup. And that is how it is. And you can see the setup ended up playing very well. That is one example in gold. I think I also have another example down here, which is a trade that played very well. I think this one was last week. The same thing, guys. Nothing changes. We just use our checklist. Nothing changes. You see, structure with direction of the market, we are bullish. The market is making higher highs and higher lows. Next one, sweep of liquidity. I have to see sweep of liquidity. Sorry. Uh, Sorry for that. Let me go down there. Here we are. So I have to see a sweep of liquidity. We have retracement, break of structure, market came back, swept liquidity, and then push to break the structure. You see, sweep of liquidity, a valid break of structure. Then the next part is liquidity. Where is the inducement? I knew very well that this one we have some kind of trend line liquidity. We have first touch, second touch, third touch. So all that became my inducement. So that is my liquidity. And where is your point of interest? Here I have my order block. You see very well. I have my demand zone here or an order block. Does it have a FVG? Very well. You see, this FVG was halfly mitigated, but still there is some gaps here. So I knew very well market will come back to mitigate that FVG and also tap to my order block. And that one, guys, happened very nicely. And you see very clearly here, I don't think whether in a lower time frame there was any confirmation down here. You see, market just tapped to the order block and moved aggressively. You see very clearly, and the trade ended up being a win. So guys, if you practice this strategy, if you practice this trading plan, I can promise you for sure you will be profitable and you will be making a lot of money or from the market. And still, another point to put across, this one does not have limitation in every chart. In any chart, you can apply this strategy in every chart that you can think of. Whether you trade BTC, whether you trade Forex pairs, whether you trade the Nasdaq, whether you trade the crypto, whichever pair that you trade, this setup really plays out. So now I'm going to give you the last example, a trade with confirmation now. And when I say a trade with confirmation, this one comes from the higher time frame. And I'm going to use an example here in a Euro AUD. We are going to use an example on a Euro USD for our chart. We have a break of structure. Someone is asking, is this break of structure valid? Yes, you can see here we had some small pullback, a break of structure. So this was a fake BOS. So market swept this low before pushing to break the structure. So this is a valid break of structure. But this one, it's a fake break of structure. Market never swept any. There is no a valid inducement here. There is no valid pullback here. So all this one had to become inducement. Then now you have our order block here with a fair value gap. Market came to this order block. Now, until the market comes to your order block, you are not getting involved, not unless you see a good setup here to get involved in this counter trend or this retracement, of which I don't advise you to trade these counter trends. Now, I want to show you the confirmation here, because now that the market has come to my point of interest, and this is whereby now, if your setup comes from the higher time frame, that is from 1 hour and above, I have to wait. Sometimes I do wait for the confirmation, because sometimes I might have a point of interest which is not at the extreme. So maybe if my stop loss is so big, so I have to wait for the confirmation for me to get higher risk to reward. And also to be sure that the market is willing to, or my point of interest, it's strong enough to hold the market. Are you getting? Those are the advantages of waiting for the confirmation. First of all, to increase your risk to reward. The second one is to make sure that the market is willing to reverse from that point of interest. May it be a support zone, may it be a resistance zone, may it be a point in your trend line, whichever the strategy that you use. The confirmation is very crucial. Now, I will not explain so much on my entry confirmation, because I will make a video on how I take my entry confirmation. But for the purpose of this video, just allow me to explain explain that in simple terms. But don't worry, if you don't understand, don't worry, I will make a video to explain that one in details. So the same thing, the way I look for my setup is the same way I look for my entry. The only confirmation is where I place my entry. So now if you look at here, I have to identify my strong high and my weak lows, or my strong lows. That is the point. And if you look very well here, we have a break of structure. Market swept this high, you see from here. This high swept liquidity above this high before pushing to the downside to break this low. So this becomes my strong high, and this is my weak low at the moment. Later on, I was not expecting this high to be taken out. So if the market takes this high with a candle closure, then that one becomes a change of character. So when after seeing this change of character now the next step, where do I take my trade? That is where I go to my entry model, whereby I take my Fibonacci tool. I place from the swing high to the swing low. This is my swing high and this is my swing low. Because I'm not sure where the market will retrace to, I like to set my limit order at the 50% of the Fibonacci tool. And this is where we have the 50%. And you see very well, in this setup, market respected the 50% of the Fibonacci tool. It came exactly at the 50% and reversed from there. Now, where is my target? As usual, you know very well, I like to set my target as 1:3 in every trade that I take. And you see, at this point, we lock up 3%. That one can be your first target. The next target should be, let me go down to 4 time frame. Mine 4 hour. Let me go to 4 time frame and show you that. The next target should be this swing high, because we know very well the market is in a bullish trend. And you see, if someone could have held that market, at the end of the day, you lock up 5.47 risk to reward plus the 3%. If we had maybe risked 2% here, 1% at 3 here, then you leave the rest of the uh the rest of the order to play out to the full TP. If maybe you are risking 1%, that means you lock up 0.5 at 1:3, then you leave the rest to the full take profit. Now, this is the concept of risk management, which is also very, very, very important. Don't go full margin, guys. Don't go full margin. You know, there are those people in the social media nowadays. Someone is advising people just to go full margin. You know what? Know what? But unless you have a lot of money to just risk here, don't go full margin. Just apply proper risk management. And at the end of the day, you will see the importance of it. So guys, that is it for this video. I know it has been a very nice video. Maybe you can leave a comment in the comment section. Just tell me, how was the video? What should I make a video for next? Although I've told you I will make a video on the entry confirmation. So if you are new here, or maybe if you have been following me and you haven't subscribed to the channel, please consider to do so. Turn on the notification bell, because very soon and very soon I'll be dropping that video and many more to come. So without further ado, I wish to stop at this point. Until next time, it's a bye bye. See you next.